Hi trader, good morning or good evening. Bonjour mon ami, guten Tag mein Freund, and marhaba habibi. Comment ça va? How is it going? Kayfa halukum? Wie geht es Ihnen? What a wonderful day, I hope you are okay. This is Mario from Forex Other Way, the channel for traders, run by a trader. In today's video I will show you how using a simple indicator and two simple lines all accessible at MT4 chart you can forecast the prices, future movements of the prices. So let's start the rock and roll. So in front of me I've got Loonie, USD Canadian dollar chart, daily chart, and let me show you what I do. First thing I do, I got over here stochastic, it's 44.15.3. So that's the settings of the stochastic. I got it already proved. There's very good settings for stochastic. For this purpose, I'm going to show you. What I do first, I'm going to the daily chart. As I told you, we are on Loonie. Here we go, USD Canadian dollar. And what I do, I'm not watching on the trend over here at the moment. Leave it like that. First thing I do, I draw the trend line. I'm not talking at the moment. I draw the trend line on stochastic. As I told you in one of my previous videos, or maybe two of them, I draw the trend line over here on stochastic. Here we go. Here we had a falling market. Before we had a rising market. Very simple, nothing special. It's not fucking rocket science. It's pretty simple. So as soon as stochastic, this is the baseline of stochastic, it is no signal line, so this is the first line of stochastic. As soon as the line breaks through this line, I get out of the long positions. I'm not trying to get into the longs, especially that we are at the level of 80. So the trend line is broken. Okay, so after that, I'm looking for opportunity for selling. How I do it, I'll show you later on. At the moment, because after this rising market, we had a falling market. You see from this date over here, I'll show you, it was 8th of January 2020. So right over here, I can draw a line. I'll show you. Where is this? 8th January. Over here, we are 8th January 2020. That's what I've got over here at the moment. So from this moment, I'm looking only for longs. Well, basically can get into the trade straight away and wait what's gonna happen. But it's much safer to wait the market settles down after the first impulse. If this is a first impulse, but it is, I assure you, we have to wait till the market settles down. Same story here. Look, this is the line, whatever is drawn, it's not precisely, but this is the trend line of stochastic. It's been broken over here, right here. So as soon as it's broken, the market always, after breaking this line, comes back. That's what happened here. Same story. So till the market comes back, we have to wait. It has to settle down and after to move forward. Later I make it bigger. Look here how it looks like. After the market started falling from this area, we got a very nice formation here inside bar. This one, this bar is inside of the other candle. So we could start right from over here, but as soon as the market started falling, this big candle, it might have been also the market makers. There's no selling positions at all over here. So that's the reason why it pushed. I explained in the previous video about the market makers. Whatever. The price came back and settled here, yeah? That's what I'm talking about. As soon as the price broke here and we got the signal, I will wait till the market settles. And as you see, there is a big pin bar over here. And then market settles for 1, 2, 3, 4, 5, 6, 7 trading days. Is cooling down, we might say. So that's the first thing. And what else? I know already over here that the market possibly started rising. and it rises till I'll show later on what's going on. At the moment, that's the story. So the market is rising from this area as soon as crossed here and cross above 20 level. It's a rising market. Here, after this signal, I'm looking only for the opportunity of buying, not selling over here at all. It doesn't worth a candle to sell in a rising market. You know, it's just catching the falling knives. There's no reason to do that. So whatever. That's the first one. After I go to 4-hour charts, let's change it to 4-hour charts. It's over here. And where are we? August. No, we are not here. Sorry. I'm going to the 4-hour charts. Here we go. The market has been broken. Over here, can you see already we got a signal? I don't know what is. It's 0, 0, 0. Okay, so 4 hours is up to here, probably 16, 20, 20. So this is 8 is ending over here. I will move it over here. That was what's happened. 8 was a signal. The market moved, whatever. And then the next day market went up. We are on 4-hour charts. Look, this is the settle up area. What I usually do, I wait for correction. First, the market has to go up, but it's not certain. Very often is a fake over here, and market might go back again and continuing this falling trend. But here is the confirmation. You see this lovely candle. This engulfing candle is a fake. Trust me. But the market fallen a little bit over here, so it's not that bad. Someone might have done some money over here, but not that much. We are waiting for long runs, long moves. So I presume if the trend line has been broken on stochastic as well on over here is not broken yet. Stochastic trend line has been broken. I presume that the market will settle somewhere in this area and then will start rising. So we got the first impulse. That's the most important thing. First impulse is over here. That's the first impulse. Yeah. So let's do it a square or whatever. That's the first impulse. I'll show later on what's going on. So I presume from this level, market has to retrace at least to 61% of the whole movement. So between the area of 50% and 61.8%, market have to make a retracement. So putting a simple Fibonacci over here, we might guess it. And then when the market retraces, probably find somewhere the resistance, the support area, at support area, and over here, usually I buy, because I know it doesn't matter that the market here is in the area of 80 or just under 80 of stochastic. Stochastic with the value over 80 market can stay long time. So that's the area after the first impulse. I'm waiting for retracement, 61.8% or preferably 50% of the whole movement, which should be somewhere here. And I'm waiting. If it doesn't happen, it means there is strong accumulation zone. And here, here's the money accumulated. Market makers are getting ready. Bankers, whoever is here with big orders, waiting just to load up the selling, just to catch the sellers over here. So that's the area. Then I go to 1 hour chart. Let me show you. This 1 hour chart is same story. We are 9 January. On 1 hour chart, I'm looking for the zone. I'm looking for the area where the market retraces and falls in the value below 20 on this my stochastic. Once again, I tell you, it's 44.15.3. That's the settings for this stochastic. I wait till the market gets right here under this line. And here I'm getting into the market. Right here, as soon as it falls, I just get somewhere here, because that's the cross. That's the value. Let me just mark it for you over here. So getting into the market here, I'm on the position. The stop loss, usually not very big. 30, 40 pips should be okay. 30, 40 pips, not more. But the profit, I'm expecting profit in the area of 3 to 1 or bigger. As soon as the market starts growing in my direction, I add up to the position. I'm pyramiding the position later on. Let's come back to 4-hour chart over here. So we are on 15 somewhere. Here was 15. That's the place where it should be bought. Somewhere here. I mark it with this ellipse. Oh, here is the area buying, because here, as you remember, the stochastic fall below 20 on 1-hour chart. Here we go. This 15 January up to 16 January, the stochastic value was below 20. And then, but it's not the end, it's just the beginning, because I have to measure now more important things. We are on 4-hour here. I've shown you already this square. What I'm trying to guess, I'm trying to forecast what will be the next movement of the price. So from the very low of this, after the price moves up, I get this square, I find the lowest point of the market, and I'm trying to predict where will be the first leg, and I'm assuming it's somewhere here. That's the first leg of the movement. After the first leg, I add up to the position, usually somewhere in this area. I'm adding up to the position and put the stop loss somewhere at this level. I'll break even. And from here, the market should move the next level. So, because this movement was this size, I make it more precise. The next level should be somewhere here. That's what I do. So the next level is right here. So we got 1, 2, 3. Now we know already what level we might have achieved, but it's the other issue. Now we've got the issue with the timing. What to do with the timing? I show you right now. Look now. Look, I'm doing the timing. I make it smaller. Is it daily? No, it's not. Let's do it daily. That's what I do. I get the daily chart, and now I'm measuring the size of the impulse, the last one. How long did it last? It is in this area somewhere in the middle, let's say over here or over here. This candle doesn't matter. It's just, just for a general purpose to just make an idea. And here I draw a line, not this one. I draw a line here like this, and I've got the line. Having this line, I know that from the impulse here, the price probably will return at the same area, because this geometric area, and here comes the line. Okay, so it's known already that the impulse will take 3 squares I've shown you. So this is the first one from here. The size 3 or 2. First movement was here. The second is over here. It was slightly smaller, the second leg. And the third leg is from the second to the third leg. So I already know how high the price should go and how far when it's going to happen. That's it. Just missing, you see, missing 1 to 3 days, 3 trading days, and as the value missing by 50 pips. It's not that bad. Taking in consideration that the opening position was somewhere here with the stop of 40 pips, I told you, or 45 pips, whatever, up to here is 240 pips, which is 6 to 1. But, I positioned it here, and closing the half of the first leg, I close one position after I close the other one. I didn't close it right here. I closed it earlier because I've seen already that something is going on the lower time frames. If you liked my video, don't forget to subscribe, give me a like, and watch my other videos. I'll see you next time. Thanks for watching. Have a good one.